Thanks for tuning in. Holly Shields here for Kalkine Media. Australia has a robust financial sector with over 80 big and small financial institutions as a part of the banking system. Even during the peak of the pandemic, a few banks managed to reward their shareholders with healthy dividends. But while the ASX 200 reported a gain of 1.9% in October, a few banking stocks performed better, and others performed worse. As against expectations, not all the best performers were from the Big Four. So with that said, here are 3 ASX-listed banking shares with decent year-to-date returns for November. First up is Commonwealth Bank. Shares of Commonwealth Bank have given a return of 29% year-to-date as of the November 6th. On the other hand, the loan impairment expense stood at $554 million, implying a 78% reduction on 2020. Meanwhile, the bank maintained a strong provision coverage ratio of 1.63%, reflecting the economic uncertainty from the continuing pressures of the pandemic. Commonwealth Bank recently made a further push into smart payment solutions via a device similar to Square's tile-style chip reader. Next up is Macquarie Group, whose shares have given a return of nearly 44% year-to-date as on November the 6th, while their one-year return stands at nearly 52%. Macquarie bolstered its near-term outlook after posting a record profit on and announced plans to raise at least $1.5 billion as it looks to step up green energy-related investments. The country's largest asset manager and the world's largest infrastructure investor more than doubled its first half profit to $2.04 billion, boosted by a global power crunch that rolled the commodity markets. And last is NAB. Shares of the bank have given a return of over 24% year-to-date as of the 6th of November, while their one-year return stands at over 52%. NAB announced an unaudited statutory net profit of $1.65 billion in the September quarter, while cash earnings grew 10.3% compared to the prior corresponding period. The quarter also saw NAB announce a hefty $2.5 billion share buyback, and earlier, Australian entrepreneur James Spencerley was said to be appointed to the board. However, the decision was later revised by Spencerley due to feedback from proxy advisors. And that concludes our list. Now that you're up to speed, why not check out some of our other videos to boost your financial IQ and stay up to date. This has been Holly Shields for Kalkine Media.